Hi, I'm Cliff Ennico, legal and tax editor for itsyourbiz.com with some thoughts on income taxes. So, you're selling stuff online. Let's say you have an eBay store or you're an Amazon.com affiliate and your customers are all over the place. You're getting orders from just about every one of the 50 states. Now, you know you have to pay income tax in the state where you reside, if your state, of course, has an income tax. But what about all those other states? Are there any circumstances in which you have to pay income tax in another state because of the stuff that you're selling online? Well, the answer used to be no. You didn't have to worry about this, but those laws are changing right now. It's no secret, folks, that a lot of states are desperate for revenue right now, and I mean desperate. And desperate people do desperate things. A lot of states are looking to tax out-of-state sellers in any legal or constitutional way that they can, and a number of states are expanding the rules requiring out-of-state sellers to pay income tax, what we lawyers call nexus. NEXUS. NEXUS is basically a set of rules that say when an out-of-state business is required to pay taxes to a state or local government. Every state has its own set of nexus rules, and they are all over the place. No two states have exactly the same set of nexus rules, but we can make some generalizations. So, if you are in state A and your business has a physical presence in state B, let's say, for example, you have a satellite office in state B, or a P.O. box, or maybe you have an employee who works out of his or her home, and that home office is located in state B. All of those are situations in which those satellite offices and mailing addresses could be viewed as a physical presence. And if you have any of these in another state, that state's tax authority might consider that your physical presence is enough that you have to pay income tax on the income that you make when you sell stuff to residents of that state. So if you have any kind of a physical location in a state other than your own, talk to your tax accountant and find out if you have nexus in that state. If so, you're going to have to register and pay income tax in that state on the sales that you make to residents of that state only, not your global sales, just the sales to that state. There's another situation, too, in which you can have nexus for income tax in another state, and that is if you have transaction volume that is huge in that state. A growing number of states, especially in the northeastern United States, are requiring out-of-state vendors to pay income tax to their state when two things happen. Number one, when their sales volume in the state exceeds a certain amount, and number two, when they are directing and targeting their marketing to residents of that state. So let's say that, for example, you're in Connecticut that has a rule like this. If you are selling more than $10,000 worth of merchandise to Connecticut residents each year, and you are targeting your marketing in any way to Connecticut residents, you are deemed to have nexus for income tax purposes in the state of Connecticut, and they're going to require you to file Connecticut income tax returns each year. Now, keep in mind, those two things both have to happen before you have nexus. First of all, your transaction volume in a certain state has to exceed a certain amount. In the vast majority of states that have these rules, the number is between $10,000 and $20,000 a year. So as you see yourself creeping up toward $10,000 to residents in sales to residents of a specific state, you might want to stop for a little while, talk to your tax accountant, and find out if you're going to have nexus in that state if you go over that threshold. But it's not just going over the threshold. Not only must you have more than X thousand dollars worth of sales in that state, you must also be directing and targeting your marketing to residents of that state. So if all you've got is a website, a passive website, where people come and hit on your site and look at the stuff you have for sale, and you're not reaching out to them in any way, you have nothing to worry about here. But if you're doing email blasts to residents of a specific state, and especially if you are offering state-specific deals like, hey, residents of Connecticut, buy two of these from our website and we'll eat the shipping and handling, for this week only. If you're doing special promotions like that are targeted to residents of a specific state, you are probably going to be deemed to be targeting your marketing to that state, and they will probably want you to pay income taxes in that state. So be careful how you do that. Another example is websites. If you are taking out banner ads on a state-specific website, a website 98% of whose customers and members are residents of a specific state, you might be considered to be targeting your marketing to residents of that state because not a whole lot of other people are looking at this content that is on that website. So those are some examples of situations where you might be directing and targeting your marketing to residents of a specific state. If you are not targeting your marketing to residents of a specific state, you probably don't have anything to worry about in terms of income tax nexus, but you might still have nexus for sales tax, and we'll be covering that topic in another video. I'm Cliff Ennico for It'sYourBiz.com.